Ben Wuollet, welcome to the Capital Raiser Show. Team member of mine at Bakerson. Super excited to have you here. We're going to have a very fluid conversation about who knows what today. So I'm pretty pumped up, man. Welcome to the show.
Thanks. Yeah, it's fun to be on. It's taken a little while to get on.
Well, this is your first podcast, right? You haven't been on anyone, so I'm trying to get you on a couple. Are you nervous at all? Are you pretty comfortable?
No, I'm pretty comfortable.
Okay, cool. Well, let's dive in, man. The nice thing about being with Bakerson and starting this podcast is I get to promote a little bit about Bakerson almost on every show. I talk a little bit about what I'm up to, my background. But now we get to dive into you and your background and your perception of the company. So tell us a little bit about your background, who you are, what you're doing within Bakerson, what is your position, and let's start there, and then we'll go into a little bit about who Bakerson is.
I'm Ben Wuollet. I run acquisitions here at Bakerson. Bruce is my father. He's the owner of the company. I've been here now for 7 years. Started off actually doing property inspections and cleaning out our houses. Back when we were doing all of our wholesaling back in 2012, I would go drive all the properties in the morning, do the property condition report, and then I would hear about which ones we won. And then in the afternoon, I'd go clean out those houses so we can get them ready to flip. From there, I got, a tease of what we were doing in the company. And I wanted to start doing some buying and selling of homes. So I just kept asking, every week, how do I buy a house? And Bruce, he always just teased me, go buy one. I'm like, well, how do I do that? And he's like, just go find a seller. I'm like, well, how do I do that? And I just kept asking that. Said, well, go drive a neighborhood. He said, just go take down all the addresses of all the bad properties in the neighborhood. We'll research them, and then you can just go knock on their doors and see which one would want to sell. So I still remember my first house I ever got. It was down off of Bethany Home in 67th Ave area. And I talked to that guy every other week for about 2 or 3 months. I just kept knocking on his door every time I was in the neighborhood because I was in that area a lot. And finally one day he said, you know what? I'm old. I can't be doing this anymore. He was remodeling it. He said, my knees are going out on me. I need to sell. So we just made him an offer and he took it. And it was pretty funny because that house, Bruce flipped that house within 4 hours to another investor. That was my first taste of acquisitions. And then from that point on, I've just noticed how addicting real estate can be. There's so much opportunity out there.
What are the most addicting aspects of real estate that you like?
Even with all this competition that we have, I still believe there's always opportunity. It seems like every day there's more competition coming to the Phoenix market, but there's enough, it's a big playground. There's enough deals for us to all make a lot of money and to continue to fix Phoenix and Tucson. The part that I think is addicting is seeing the transformation when we got out of wholesaling and into transforming communities, taking a property that was the neighborhood eyesore and bringing it up to something where people are living in there. There's a vibrant community. There's the buzz. You can hear the people going, to and from their units. They're maybe hanging out in the common areas. That's fun. That's what's really exciting.
Okay, so walk us through a little bit about the evolution of Bakerson, where they started, what has been going on over the last, I suppose, 17 years since Bruce started flipping. And then we'll talk about what was your perception as you were seeing this happen? Because I think back in 2002, you were 9 years old and you got to watch this whole thing unfold.
Yeah, it was funny. Before I started, I never really thought in depth what my father did. As a kid, I remember going to the houses. There's a house I remember, I believe it was his first one. There was 2 houses down in South Phoenix that were right next door to each other. It was one owner. And the property just ended up being in really bad disrepair. I mean, there's literally a hole through the ceiling, through the roof. When you sat in the bathroom, you can see the sky. And there was, no joke, there was dog poop piled up into the corners. We went through 4 or 5 40-yard dumpsters. And I remember as just a little kid, I was like 9 or 10 years old. My dad took me down there to go clean that house out. And it was just really eye-opening living in North Phoenix and going down to that neighborhood and just seeing that home in that condition. There was other houses. He brought me to one house on Cactus. He brought me to a few other houses. I always enjoyed going to clean them out. But then when I got older, went into high school, I never really thought what he did. I came back from Finland. So after I graduated high school, I went out and lived in Finland for 1 year. I was at a college prep school. It was really cool to go and see the culture out there. I came back and I was wanting to actually be a diesel mechanic before I ever thought about getting into real estate. I was working at a job and I hated it. I did not enjoy a single day at work when I was there. And I just kept bugging Bruce and, hey, I just want to come work for you guys. I don't know what I can do, but I just want to come work for you. And it took me about a month of consistently bugging him every day. And he finally said, you can come work for me, but you have to report to your Uncle Mike. I won't let you work directly for me because I don't want people in the company to think I hired you just because you're my son. So he said, you have to work under somebody else in the company to prove that you actually want to work for the company, not just for me. But Bruce started back in 2002. Really, he was working for another guy. He did not enjoy working for other people. He bounced around. After working in the bakery business for many years, he bounced around and did executive recruiting, did some other sales jobs, and decided that he wanted to do something different. He partnered up with another gentleman here in town, a good family friend of ours, and that guy was only doing tax lien foreclosures. Bruce worked for him for about a year, learned the ropes of real estate, but he said that there's so much untapped opportunity that this guy wasn't tapping into since he was only doing tax liens. So Bruce asked him, he says, well, why don't we go buy this property, around the corner? It's vacant. And that guy said, well, if you want to go do it, you can do it. So Bruce left and started doing it on his own. And that was in 2002. From that point to about 2014, 2015, Bakerson has flipped over 2,000 houses, wholesale flipped. And then we got into multifamily, and we've actually purchased 16 multifamily buildings. But before we started purchasing them, Bakerson was actually wholesaling apartments for a while. We noticed, funny thing about wholesaling is we'd wholesale a deal, and we'd notice what the next owner was able to do. They would take down the property, clean it all up, bring the rents up, and then they would sell it within 2 years. And we started seeing these spreads where we sold them at and where they sold them at. And we started asking, how much money do you put into these properties? And we noticed, man, there's just so much potential for us to do this. If other people can do this, why can't we? And that's when we started to actually buy them.
That's a very interesting concept, because you were flipping houses and then you saw an opportunity to get into multifamily and you started wholesaling them. But then at some point you guys were introduced to Joel Block, and he started talking about managing your money a different way, because a lot of the returns that you guys, Bakerson, us in general, had to pay was kind of like a hard money, multiple flips, multiple points over and over. And when you compare that to what the return is on a syndication style deal, there's no comparison. You can make a lot more money doing the syndication way. So when do you think the light switch flipped from going to wholesaling to actually syndicating deals? And what do you think that process was like for your dad? Were you around for that?
So I started right when he set up the first fund. And so at that point, I didn't know a lot about it since I was just doing the acquisitions and property inspections and cleaning out the properties. But the biggest transformation I noticed is there was a fund that was set up to flip homes. But then Joel Block kept telling us and other mentors, why do houses when you can do apartments? There's another mentor, a guy here in town that works in industrial. He kept telling us, why would you want to buy a $100,000 house when you can buy multi-million-dollar deals? He said, in his opinion, it's just dollars. That's actually what he told us. He said, it's just money. It's just, zeros behind it. If the numbers make sense, you can find the right partners to do the deal. There's money in the streets that want to do deals. And I think that's when it really started to click that to buy deals, $2, $3, $4, $5 million deals and up, you don't have to do it with just your own money. If you create either a syndication or strategic joint ventures, you can do more together than you can alone.
Yeah, easily. I would agree with that. So a lot of the investors that were flipping, or I should say the money that came from people while you guys were flipping, while we were flipping, came with us as we started going into multifamily syndication. But more recently, we actually started going from the 506B model to the 506C model. From your perspective, what do you think caused that flip? Why did we change the scheme of how we're raising money?
From my chair, when I look at the guys in the company that do the capital raising, I believe it broadens the horizon. From my understanding, you can go out and publicly market the deal. And the money that comes in, it does have to be from an accredited investor. But instead of only marketing to your pre-existing relationships, now it broadens that marketing platform. You can go, put it on your social media. You can put it on your website. So you can cast a wider net. And I think that's why Bakerson wanted to do that, is to be able to cast that wider net and find more like-minded individuals that want to invest in real estate.
Yeah, so I was talking to Bruce. As you know, he asked everybody that's within the organization to give him his 3 strongest attributes, and then he would give us what he saw most powerful in us. And one of the things that I really liked about him is what I told him was his most powerful attribute was his willingness to evolve. And as a new member of the team coming in and seeing the way capital was raised in the past and what we could do to improve that, number one being brand awareness, getting our name out, getting people to know, like, and trust us, and implementing an infrastructure where we can communicate with investors and create an educational based platform and get people onto our database. Not that they're numbers or anything, but the more people that we get in front of, the more people we can share our story with, the more that they begin to know, like, and trust us and know who we are and what we're trying to create. And it's a different structure, a different way of raising capital. And maybe you see it differently, but from my perspective, what I've seen within the organization is a lot of times we find a deal and then we raise the capital for it. Whereas a lot of the people that I interview on this show say, hey, explain who you are, explain your track record, explain why multifamily, then explain what your return structures are, and then present the deal, which is not what I've seen of Bakerson so far. So I'm super excited to implement these new strategies and help the team. Is that what you've seen so far? What do you see in terms of the evolution of the raising capital system within the structure and how we share opportunities and who we are with people?
Yeah, it's some people have asked us why we did it that way. It's not that there's any right way to find the capital for the deal. I do agree that it is better to have the capital lined up and then go find the deal, because then once you have a deal, it fits with your investors' expectations. What their expectations are on deal size, location, uh, return on investment is obviously a very important number for the investors, and also that they're just comfortable with the story of the deal. The way Bakerson always did deals, we were deal junkies. We went down to South Phoenix, West Phoenix, and we tried to wholesale everything. We wholesaled houses, mobile homes, condos. We flipped a hotel, a mobile home park. So our theory was always, if you find the deal, there's either a buyer or money out there. But now we're starting to realize that, yes, we've taken down deals that way, but I believe we can scale faster if we find the right partners and then bring the deals to those partners. Because one investor is not going to invest in every deal that we buy. There's times where we've taken down deals where one investor says, I'm not comfortable putting money in that deal, but they put money in previous deals. And then they might put money in the next deal. So having that wide database, like you said, they're not numbers. You just have to have that big database to make sure you can take down the properties that you're looking at.
Yeah, I'm listening to a lot of capital raising information about connecting with people. I've interviewed a lot of passive investors. One whose show I released today, Spencer Hilligos, was really complaining about the way people communicate with passive investors, that they look at them like numbers, that they don't reach out and have a conversation with them. So those are all things that, like, I take note of and say, all right, so we need to create a system and an infrastructure where we're in constant communication, where we're constantly in front of people, where we're communicating what's going on with all of our properties. And this is going to be fun, man. I think we're going to evolve ridiculously over the next decade doing it this way. What do you see in terms of the evolution of Bakerson? Where do you think things are changing within the organization, or how we purchase properties as of right now?
Well, one thing that we're changing is exactly that, talking with the investors more and getting them more updates. When we came from the wholesaling world back, 2012, 2013, that was just such a feeding frenzy. There were so many deals out there and we're getting in and out of them so fast. There wasn't really even time to do reports. We would buy a deal and flip it within a month. The report was, hey, we sold the deal. Here's your money plus your return. And when we evolved from that to longer term deals, we realized we didn't update investors enough. And yes, investors do invest for a return on their capital, but there's also emotion, and emotion is not a bad thing. They want to feel comfortable. A, in the sponsor, B, in the product, and see that in the project and seeing that the project is moving forward. And if there's delays, majority of people understand delays. Things happen, but if they're communicated correctly, why it happened, what you're doing to fix it, I believe a lot of the scared emotions would go away. When people hear silence, it makes them less comfortable. They would rather hear something rather than than go silent for a year.
So 16 multifamily deals that Bakerson has done. They have not all been syndication. So walk us through the different types of structures that we've created on these deals, and maybe give the audience a background about the size of these units and where they're located.
The deals that we've done have been between 8 to 120 units. The smaller deals, we typically did either a one-person syndication or a one-person joint venture, where they would come in with all of the equity needed to take down the deal. Joint ventures, Bruce and Mark have worked on the structure on that. I don't know the exact details and how they're structured, but like I said, they're typically one individual that comes in. If they want to be passive, they'll put all their money into the syndication to get the passive treatment. And there's some people that like to be more active in the deal, put up the money, be involved in the project with just some guidance. Maybe they have some experience in it. They don't want to do the day-to-day, but they can more check on it month to month and give us some guidance and from their experience. Syndications is where we've done majority of our deals. So you set up an LLC, you set up a syndication. Always want to do that through an attorney. Have the attorney draw up the documents. You don't want to draw them up yourselves, and you sell the shares within that syndication.
Now, tell me about the business model and how it's evolving. Are we going after the same types of properties that we've done in the past and for the same term and using the same lending products, or is that evolving as we are moving along?
That is evolving. When we first got into multifamily, we came from the mindset of flipping deals. So we would buy a deal and our goal is to be in and out in 12 to 18 months. We're finding that that's a good way to make income and get good returns to the investors. But every time you sell a deal, you have to replace it. So our goal now is to slowly get into the buy and hold model where we'll buy it and our goal is to hold it for a minimum of 5 years. So that way, once we get the property running, you have time to appreciate the work that was put into it. You start to get the rewards of the cash flow. People use the term passive income. I laugh at that term. For the investors, it's that invest in the syndication. It is a passive income, but as owners of multifamily, it's still very active. You have to go down to the property regularly. You work with the property managers. If there's units that come up that get heavily damaged by the residents that were living there, we go down. We don't just hire a general contractor. Nate within our office runs all of the construction. He hires the subs, he gets the materials. So that way he makes sure that we can do it for the best price as possible. And so it's still a very active, job, if you will. But I like to use the term reoccurring income. It's the income that's coming in every month over month. Versus if you buy, fix, and sell, you have one check that's at the end of the project. And so that's what we're trying to get away from, is needing to always sell or set up the business plan that, okay, this property we're going to sell. If we hold it, the goal is to then refinance the property, get it cheap enough where we can refinance the property with good debt, get the investors majority, if not all of their original capital out, but still keep them in on the deal. And then they also benefit from the cash flow, but now they don't have that risk of having all their money in that deal.
So what do you foresee for the future in terms of types of assets that we're going to be buying?
I think we'll be buying a little bit newer deals and for sure bigger deals than we've been buying. For a long time, we did 30 to 80 units. That was our sweet spot. We found a lot of good deals in that space. The challenge for that space is management. They're a little bit too big to have an off-site manager, and they're a little bit too small to have full-time on-site manager and maintenance person. Really, even on a 60 unit, you want to have somebody working on the property. That's a lot of people living in one area, but the property can't really afford that. So we want to get into 100 units and bigger. I would like to find deals 200 units and bigger. And also, instead of buying deals that are 1950s, 1960s, our goal is to start doing 1970s, 1980s, and newer. The reason for that is a lot of those have better infrastructure. Instead of having galvanized piping, they have copper, or if they've been rehabbed, they have PEX. For the electrical, you go from aluminum to copper. Just you have less issues with the infrastructure, and you can focus more on the aesthetics. You can put more into the kitchens and bathrooms and the exterior of the property to make it a nicer property.
Now we're going out of state for our first deal. Walk us through the mindset of actually going out of state, since we've been investing in our backyard this whole time. Is this something, let's share with the audience, is this something that we foresee as sustainable in terms of going outside of Arizona to purchase, or is this a one-time thing? What's your personal perspective on investing out of state within the Bakerson organization? Can we do this long-term?
I do think we can do this long-term. I actually had a conversation a few years ago with Todd Dexheimer. He was starting to go out of state. The one thing that he said that he really learned about going out of state is you underwrite deals much better because so much more can go wrong when it's out of state, and it's harder to get out there. You have to fly out to the property. Typically, the goal is to go out there, once a quarter or a few times a year, if you can. So he says he knows he went out of state. He underwrote deals much more tight. He really checked all the rent comps, really checked all the scope of renovation. I think it'll help us actually tighten in our numbers more going out of state, because our goal is to have a well-running machine where we don't have to go through every month. Another reason for going out of state is you find more property, or there's more properties for you to pick from. Arizona, it's a great market. There's a lot of properties between the Phoenix market and the Tucson market, but it's still a finite amount of properties. Tucson in particular, I think it's 10 or 20 units and bigger, there's about 90,000 units in the entire market, and 8 or 10,000 units are owned by one owner. And those units very slowly get trickled back out to the market. So there's a finite amount of buildings there. Or if we start going to Arizona, New Mexico, Texas, Colorado, Utah, now the amount of properties you can buy substantially increases.
So talk to us a little bit about Arizona, doing market analysis here. What are the economic drivers that you like? We're currently investing a lot in Tucson. Is Phoenix an option? Are we starting to look at deals? Since you're in charge of acquisitions, what's your perspective on Arizona, both Phoenix and Tucson?
Right now, everything is still going really, really well. I am also a licensed real estate agent, so I look at the MLS reports, the stat reports that get emailed to me monthly. There's just such an inventory shortage, and our population growth is so great that the rent growth is still there. For how long? I don't have that answer. It's been between 7 to 10% growth year over year. I don't know how much longer that we can sustain it, but right now it shows that this year we should be able to sustain that as well. The population growth for Maricopa County is around 70 to 80,000 people a year, with I believe it was around 20,000 apartment units in the pipeline being built. And then there's a bunch of housing subdivisions, but those people all need places to stay. So the vacancy is continually being driven down by all these people moving in. And a lot of these people are moving from the West Coast, California and Oregon specifically. Tucson still has been a great market, had awesome rent growth for 2019. Very few units being built down there. The only product that's being built is luxury or student housing. There's nothing new coming online for even a B plus. It's all high-end housing being built. The population growth is still growing there, not as fast as Phoenix, but it's still growing. But there's new companies going down there. Caterpillar built new headquarters down there. Raytheon's done some expansions. The U of A has partnered with Banner. They've built some cancer centers. There's the Davis-Monthan military base that provides a lot of economic drivers with the other defense companies that are down there. And so medical, military, U of A, you have a lot of great things going on for Tucson as well.
Tell us, how have you been finding deals, and are you going to use these same strategies going into the future in and out of Arizona?
We bought majority of our deals through brokers, but they've been brought to us before they got listed, email blasted and listed on CoStar, LoopNet, all that. We partnered with a couple of brokers, and by partnered, I mean we just got into creating great relationships with them, and they trusted us to send us deals that weren't on the market. We also have purchased some deals directly from the owner. Pueblo Springs that we own in Tucson, we bought directly from the owner with no brokers involved. I see buying from owners still being a viable source. There's some owners that just don't like working with the brokerage network. They think that they're paying too much to the broker to sell it, and they'd rather sell it directly to an owner. Or you just catch an owner on the day where they might be frustrated with the property and they entertain an offer. Maybe they're frustrated, they're out of state, they have to come out to visit the property, or maybe their management's not going as well for them, or they just realize the property's getting tired and it's time for them to pour a bunch more money into it, and they're just mentally done with the property. And one guy that we bought our property from, he lived, it was only about 2 hours away in Sierra Vista, but he had to come up to Tucson once a week. And there's many times he'd have to spend the night, and he already had a couple other businesses that he owned. So that every time he's coming up here, he couldn't focus on his businesses. So instead of switching management companies and pouring more money into it, he bought it at such a good price a few years prior to when we made him an offer. So he was able to sell it, make still great money on it, and take that money and go back to focusing on his businesses. So we just connected on that level of, what is the problem we're working to solve? He had a problem, we were a solution. And if you focus on it from that angle, there's sellers out there that will sell direct.
So a typical day in the life of Ben Wuollet at the office, are you doing underwriting pretty much all the time? Is it some of the time? Tell me a little bit about, so I've come across some off-market deals, and then I'll shoot them over to you and you're like, oh, I've already seen this 17 times. So are they really, off-market or direct to seller access? Tell me a little bit about your perspective from that.
So I do a lot of underwriting every week. You have to continually underwrite deals, even if it's not putting it fully into the underwriting spreadsheet that we have. Just running some napkin math, seeing, hey, where can I push rents to? We've owned enough properties specifically in Tucson. We know to a general idea where the rents need to be. So I can plug those rents in, plug some expenses in, and see if the back end, ARV is there, the back end value is there. And then from there, I'll back out, profits, holding costs, and then that comes out with an acquisition price. And if we're in a ballpark range, I'll always make an offer. I figure the worst they can do is say no. So you always need to be flinging offers. I also work on our dispositions. We have done a lot of fix and flip on some condos in Tucson. We are selling some of our buildings in Tucson. So I do focus on working with brokers that we've hired to sell those buildings, getting them all the due diligence items, working with the appraiser and lender to get them all the documents they need. So I work on that as well. And then I'm also like a business development. I'm always out networking, trying to meet new people to bring them into Bakerson. I really enjoy talking to people and figuring out their background, what they do. And then if it's not a fit for what I do in acquisitions, I can hand them off to other people in the business and make that introduction. So I do that quite a bit throughout the week as well.
So B and C class type properties, we were talking a little about earlier about, maybe not doing granite or these heavy lifts in a neighborhood that may not need it. And, some of our investors want that. And we're like, no, that doesn't make sense. But do you see that as the typical type of property that we would look at in Tucson? And is that something that we will also look at in that class?
Yeah, so in a lot of our properties, we haven't done granite. We did granite on one building up here in Phoenix. But most of the properties, what we've done is either repaint the cabinets if the cabinets are in pretty good condition, but maybe the paint or the stain is worn, we'll repaint them, put some new cabinet hardware, new pulls, new hinges, maybe do Formica countertops, or in our C class and C plus, we do a lot of resurfacing of countertops. We go in and resurface them, gives them a new look for really inexpensive cost. We do new vinyl flooring, try to get rid of carpet as much as possible. We'll leave carpet in the bedrooms if that's what some of the residents, some of the communities like to have carpet in the bedrooms, so we'll do that. But in all the main areas, do vinyl. Put in new low flow toilets. Majority of the buildings we buy have very old toilets, so that's a big water waste. We can put in low flow toilets for pretty inexpensive. And then we'll also resurface the tub and shower surrounds with a bright white to make it look newer, fresh, crisp. We use the terms functional, durable, clean. Yes, we're not putting granite in, we're not putting stainless appliances, but everything has to work. The AC unit needs to work. The door needs to, obviously open and shut and lock for them to feel secure. All the cabinets need to be in functional condition. They need to be clean. And the appliances need to be in overall clean condition as well. So if the appliances are looking old, you can get rid of them and get new appliances. It's pretty inexpensive.
We have this concept where we're going to create this educational platform and create a new database of investors and people that are going to be our equity investor partners. But in the meantime, we have a couple of deals that we've been acquiring, and we've had to work really hard to raise the capital for them, and maybe even use a little bit of temporary financing or money to get those deals closed. But I've been very focused on getting some joint venture partners, and some of them are asking me questions like, so I see Bruce on a podcast. I see you guys talking about Bakerson. I see the videos that you're doing on social media, and it really looks like you care about the tenants. And then they'll ask me point blank, do you really care about the tenants? So we actually call them residents. And why don't you tell us a little bit about your perspective of Bakerson's view on their residents within their apartment communities?
Yeah, I think Bruce really has set that culture where we do care. There's times that we've gotten calls, people have bypassed the management and called us directly on some issues. And we've driven down, if it's bad enough, we've driven down to Tucson to go talk to the on-site manager, talk with the regional manager, and get things handled. I believe that stemmed all the way back when Bruce was first started in business. Some of the houses he first did was 24th Street and Broadway. He did deals in Maryville, Sunny Slope, and they were lower income parts of town. And I remember as a kid, he would bring me around and he would say, a lot of these people, or a majority of these people, did not choose to be born in this status or to be born in these neighborhoods. The majority of these people, almost 99.9% of them, are good people. They're out trying to work and just live in society. And just because they don't make money to live in Scottsdale or North Phoenix or Tempe doesn't mean they're not good people. And I just remember him always telling me that you can't judge a person by their skin color or where they're born. And I think that really resonates through the company. He reminds us time and time again that we have to care about them because this is their home. When we rent out a unit, that's where they're living. And that's what I think a lot of people forget. People are so focused on the NOI. There's a lot of great operators out there, but there are some out there that are so focused on the NOI that they tend to forget that these are people that are living in the apartments.
Okay, so tell me about working within a family business. What is it like working with your father and your brothers and your brother-in-law and who's all part of the family within Bakerson?
So there's 8 people total in the company, and 5 of us are related. And we like to say that Ruben, Eric, and Mike are the adopted family. So Bruce is my father. That was an interesting dynamic that we've had to create. Many people have asked, how do you work with your father? I could never do that. It's taken us many years to figure out how to separate work and family life. We've had to create rules that at lunchtime, we don't talk about work. We talk about family. We need a little bit of a break in the middle of the day. After work, we shut it down. When we're hanging out, either I go to his house, he comes over to my house. We have to shut off work because our family, if we start talking about work the entire time we're together, they start rolling their eyes and say, are you guys married to us or are you married to your work? And so we've had to create those boundaries. Plus, at work, I have to remember if something's going wrong and things get heated, that he's not upset as a father, he's upset as a boss. It's boss to employee relationship. It's taken us, like I said, I've been here 7 years, and it's taken us many, many years to figure that out. I think it was around year 5, we finally started setting those ground rules of when we're at work, we're at work. When we're at home, we're home. One of my dad's brothers, so my uncle works here, Mark. Greg is married to my dad's sister. So he's our, he's an in-law. And then Nate is my brother-in-law married to my sister. And there's definitely a lot of ups working with family. There's a lot of trust that we've developed. We literally trust each other with bank accounts. There's times we've paid for stuff out of our own banks and then had the company just reimburse us. We just trust that Bruce will reimburse us and take care of us. And I believe that we've cultivated a culture that we're all here for everybody. And it's not just the family. It's, with Ruben and Mike and Eric, we do whatever it takes to get things done.
So tell us about the actual infrastructure of the company. Why typically when I have people on the show, there's like 2 or 3 lead sponsors, and they're the ones that are, there's usually one person that's investor relations and another person that is, acquisitions and underwriting. But we have 8 people. So walk us through what is exactly what those 8 people are doing, maybe so that the general audience can understand what Bakerson is as a company and what's going on in the infrastructure of that company.
So Bruce is the owner. He's the sole owner of Bakerson. I run acquisitions. Mark helps with the underwriting, and he's controller, helps with the capital stack, how to get the right debt on the deal, how to get, which equity we want on the deal, and figuring out, is a deal we want to hold for 24 months or 5 years. Mark helps me with all that. Ruben is doing all of our marketing and helping with the capital raising. Eric is director of revenue and marketing. And then Nate does all of our construction. So instead of hiring general contractors, there's some people that instead of having an extra person on their team, they might just go find a really good general contractor. But we've decided to bring that in-house to control those costs. Mike is property research and title research. He helps. He's just a great person to have on the team. Anything that you need done, we can give it to him and he'll get it done. Greg is our asset manager, and he does all of our accounting for the company, works with the accountants and works with the property managers. I think that's everybody. The reason we had so many people on staff is we didn't partner out for a long time. When we had syndicated deal, Bakerson would find it, Bakerson would operate it, Bakerson would raise the money, and we did the entire deal start to finish. And now we're starting to look at partnering out. Like you said, you've introduced a couple of new joint venture partners, deal partners with us. And we've now figured out that, well, instead of us trying to always do everything ourselves, why don't we do partnerships with people that may be better than us at certain aspects of the business? I think that's just the reason why we've had so many people on staff, is we always did it ourselves. Let's just keep it in-house. And because we kept the controls when we did it all ourselves.
So I know that you're an avid podcaster. You listen to a lot of podcasts, you read some books, maybe even Audible books. What are some of the things that you like to read and listen to?
I like to listen to a lot of business. There's a couple different podcasts I listen to, Todd Dexheimer's, Rod Cleef's, Capital Raising Show. Have to drop that plug in there. But then I also listen to some CEO stuff. One guy, he's crude, but he has a lot of good content, is Andy Frisella. That's one of mine. It's just a no nonsense podcast, and he offends a lot of people with his language and how he talks, but I enjoy listening to it. But then to deload the times I want to listen to something, but I just want to more relax, I listen to a lot of fitness podcasts. I've really taken health into consideration a lot over the past 2.5, 3 years. I just got really overweight, working a quote unquote sales job, sitting around a lot. And I said, well, I need to start taking care of myself. And so I do a lot of health podcasts. I just like to listen to different perspectives on ways to stay healthy through exercise and then eating healthy.
Okay, sorry to catch you off guard, but we've introduced a new segment that hasn't been actually released yet, and we call it the lightning round. So I'm going to ask you a few questions. If you can keep your answer a little bit short so we can get through as many questions as possible, I'm going to go ahead and get started. So boom, what's your favorite hobby?
Mountain biking and road biking.
Okay, how many kids is the right number of kids within a family?
I don't have that. I come from big families. There's as many as 18 in my mom's family, and down to I've got 3 kids myself.
Yeah, the Wuollet family is definitely very fertile. What's your favorite food?
Steak.
And how many units do you want to own in the next 10 years?
Our goal is to get up to 5,000 and then to 10,000.
Do you foresee yourself staying within Bakerson long term?
Yes.
Very cool. All right, man. That's great. Thanks for participating in that. So we've been at it for about 45 minutes. I do have a few last questions for you, but before we get to them, why don't we go ahead and give the audience an opportunity to find out how to connect with you? Do you prefer LinkedIn? Do you have an email address you want to share? Tell us a little bit about your website, et cetera, et cetera.
Yeah, you can always visit Bakerson.com to see more about the company and all of our biographies. You can always email me at ben@bakerson.com. And I'm also on LinkedIn. I do have an Instagram. I'm not as active as I should be. That Instagram is Ben Bakerson, all one word. And you can also follow the Bakerson Instagram. It's a Bakerson Capital, right?
Yeah, Bakerson Capital is our Instagram for sure. I'm not going to let you get away without the hardest question that we had actually been discussing before the show started. So I've been actually delving into metaphysics, autosuggestion, manifestation, spirituality, And I wanted to get some perspectives from you if you think any of those things and focusing on those affects your business, and maybe a little bit of insight into your spiritual views, because I get nervous around the subject because I'm very spiritual and, I like to follow my morals, but some people, for example, Whitney Sewell starts talking about Christ on his show or on other podcasts. And it makes me nervous because, I believe in God, but I don't necessarily have the same viewpoints as other people. So what's your take on it? How does spirituality and auto-suggestion or some of the things that you drive thoughts into your mind affect your business?
Religion is a big part of our family, and I think for me, it's a way for me to set good morals and just have good reminders week by week to try to do the right thing. Um, the weeks that if I don't focus on it, it seems like you start becoming a little bit more selfish. It's about me, me, me. But then when I start, really listening, you go to church, you start talking with other people within the church and in friends and family. And, me as an individual, we're just such small beings on an earth of 7 billion people. It's just, we're a speck of dust really. So I think it grounds me and just keeps reminding me that to think about the bigger purpose. Why are we here? It's not just to create a dollar. We have to create purpose and leave meaning to the work that we've done.
Awesome answer. Now, let me just ask one last question. I'm curious about, you said that you like networking with people and talking to people. I see that as an attribute that you have. Are you going to make a point, an emphasis this year to go out to some conferences? What does that look like for you?
Yeah, we have a new kid on the way that's going to be born in the next month and a half. So that's going to put a little bit of a hold on my schedule for traveling out of state. But there is a conference, one of the IMN conferences that we're looking at going to in March. I'll be always going to the meetups here in Phoenix. If there's any meetups that people would like me to attend, I would love to see the new meetups that are around town and meet other individuals that are just in real estate. It doesn't have to be specifically multifamily. I do enjoy meeting with people that are even in single family or even other commercial events. And then the IMN conference is the one that we go to those all the time. Bruce gets on as a speaker. We know a lot of the people that attend. It's just, we found some really great connections through there. The one that I'm going to miss this year, unfortunately, but I'm hoping to start attending is the National Multi-Housing Conference. That is just probably one of the most talked about conferences for multifamily.
Oh, you'll have to give me some details on that offline. All right, cool, man. It's been fantastic having you. Congratulations on your new baby on the way. I'm glad that I got to premiere you as the first person to ever interview you on your podcast. Hopefully we'll get you on a few more, get a little bit more brand awareness. I know people really appreciate the fact that we have different characters and different people and different personalities on the team, and that we're all pretty much in alignment and good guys. So it's going to be cool as the world finds out who you are, because you're an awesome dude, man. So thanks for coming on the show.
Absolutely. I got one last thing I want to say. The reason I like working with a bigger team and having people with all these different personalities, one of our coaches, Mark S.A. Smith, said that the nice thing about having different people, different life perspectives is we will all watch out for each other's blind spots. So if there's times that, I may be underwriting a deal wrong or maybe I see something that somebody else in the company is doing something and maybe I can see it more clearly, I can jump in and help, or they can jump in and help me. So having people in the company, we're always watching out for each other. So that's why I enjoy working with people instead of, working alone.
Those are great last thoughts, man. All right. Well, it's Friday. It's time to enjoy the rest of our weekend. I look forward to seeing you on Monday at the meeting, which you're going to be running, and we'll check you out then, man. Thanks again for coming on.
Absolutely. It was fun being here, and look forward to doing more. There's money in the streets that want to do deals.